Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for Monday, March the 23rd. Before I jump into the content for this video, please do me a huge favor, hit the thumbs up button. Don't forget to subscribe to the channel, and of course, don't forget to click that bell icon to get notifications when I release new updates. Also, don't forget, if you haven't already, you can join the Patreon. There'll be a link down in the description. It's as little as $4.95 per month. And in there, you'll get more frequent video updates and also chart updates. For example, you can see some of the posts here. These are just the posts I made in the last 72 hours or so. All right. Let's jump into the weekly chart first, and then we'll kind of drill our way down to the daily, and we'll talk about what's happening and some of these different time frames. All right. So first things first, let's just take a look at the 200-week moving average. Let's take a look at key resistance. Let's take a look at RSI, and we're going to look at hash ribbons today as well. So first things first, guys. Obviously, we went down. We found support on top of this 200-week moving average. This week that just closed about 20 minutes ago, of course, had this really nice pump, and I saw a lot of people getting excited. A lot of the same familiar faces talking about this going back up and the bottom being in. The trolls coming out and insulting me and whatnot because I'm still not ready to say the bottom is in. Listen, this bounce isn't really anything surprising. If you go back and watch my video from last week on March 16th, I actually said that I expected that it might pump all the way up to 6908, right? In reality, it pumped up to 6,990, so right in that general area. And the reason that I called that area is because that was the previous line of support. That was the previous weekly close, the lowest weekly close in the last, basically since this downtrend started right back in June of 2019. So that's where that target came from. And when you find support on top of the 200-week moving average like that, it was to be expected that there was going to be some type of bounce or some type of pump. And that's exactly what we got. And when it came up there and it hit this price resistance, this horizontal price resistance, RSI was actually touching this yellow line, right? It looks like it never got anywhere near it. It looks way down here because RSI, this particular RSI, is figured on closes. So it determines, the close determines where the RSI lines are drawn at. But when this was actually happening in real time, this was way up here. So for example, this was the post right here that I made on Patreon, and I'm just using this so you can see, right? It was starting to move up, and it had already started to move back down, but this was actually touching this at one point when this price was also touching this red line. So you can see that now it looks like it's way down here, but it was a very clean rejection, and it was a very, very easy trade to take, all right? So that's over and done with. There was our, so far what amounts to a dead cat bounce. So the next question is, what can we expect next? And we're going to talk about that a lot today. So let me get rid of some of these past pumps. But before I do, just remember, right, you get a big pump. This actually did pump about 81%. People are like, oh, man, this is crazy. Can't possibly be a bear market still. Well, this was the bear market of 2018, 65% pump, 100% pump, 54% pump, 46% pump. All those happen during a bear market. So dead cat bounces can be very, very tricky, and they can be very misleading. All right, but so far that does look like a dead cat bounce. So right now our 200-week moving average. All right, so I just noticed that I actually have been talking about the 200 exponential moving average, which is not what I meant to do. I had that on there. I was checking. Somebody had told me that there was getting ready to be a golden cross on the weekly on these EMAs. There's not. It's not even close to happening. I don't know what they're talking about, but that's the reason I had those on there. So the regular 200 moving average, I thought that was weird. We'd actually closed just below it and popped back above it. Okay, so we're still above the 200 moving average. So until we actually fall underneath it, there is some hope left, but I think that's exactly what it is. It's just hope, right? I really don't see anything bullish in these charts right now. I'm going to get rid of these exponential moving averages, and I'm actually going to turn on the volume profile again, right? And we'll just put this back. We'll go all the way back to the beginning of 2017 here. To me, it looks like what we did was we came up and we started to, kind of range in here and fill in some of this volume gap right here. And I still am concerned that, there's still this gap down around 4,700, and there's also still this gap down around like 1,600, right? So that concerns me. Again, that doesn't give us a direction like in this week it's going to do this or this week it's going to do that. But big picture, that's still stuff that's in the back of my head, especially with the global environment that's going on right now. Okay. As far as RSI goes, again, this did come up. It did test this yellow line. That yellow line was from way back in 2018. It was our RSI trend line. The fact that it failed, looked like a bearish retest, that is indeed bearish, right? If it had broke north of that and broke north of this price line, there could have been an argument made that, hey, this is the bottom. But right now, I don't think that argument is valid. Now, it still could be the bottom. I want to be very clear about that. We could be consolidating right now. It could be moving sideways like it did back here, and that would be great, right? It would give us an opportunity to accumulate. But it's too soon to say that's happening, all right? Now, what I want to do is I want to go down to the bottom here, this hash ribbons. I never talk about hash ribbons, guys. So the reason that I'm suddenly talking about it is because if you remember, if you've been watching the channel a while, you'll remember that some of my critics were pointing to these hash ribbons saying that I was wrong, that the bottom was in. When I was saying 6,400 wasn't the bottom, they're saying, dude, you've got to look at the hash ribbons. The hash ribbons are telling a different story. And see, this hash ribbon actually said to buy right here. Now, in all fairness, if you had bought based on this hash ribbon, you could have made a shitload of money, right? Because this did give a buy signal at 73.84, and it did pump up to 10.5, which is like a 50% gain. So I'm going to go ahead and give these hash ribbons some due because that's a really good trade. It's just not really good long term. It wasn't the bottom, right? That being said, I'm going to give them credit because that's an awesome trade. And if you go back here and you go back and look at January of 2019, you've got to give them credit because if you'd have bought there, you would have been buying at $3,500. And of course, then you could have rode that up. And if you go back to the previous buy before that, they gave a signal in August of 2016. These are weekly, by the way. The weekly ribbons have been extremely accurate. If you'd have been buying there, you would have bought Bitcoin at $611. And if we draw a horizontal line there, on this weekly close, turn the magnet on, look at this. I mean, you would have been underwater a few percent, right? It went down like 10, 15 bucks, which would have been a couple of percent on those prices. But you never would have been in like, oh my God, trouble, right? You wouldn't have been. Even on a high leverage trade, you probably would have been okay. And of course, if you'd have bought there at $600, we all know what happened next. It ran up to $20,000. So again, amazing buy signaled by this hash ribbon. And the previous buy signal given on the weekly chart before that was actually right back here in May of 2015. It gave a buy signal at 229. Yes, it dipped below it a little bit. In fact, it dipped down. Let's take a look. From that close, the very next week it dipped about 3.5%. Then it pumped about 37%. And then these couple of tails actually came down 12 and 13%. So those are pretty big drawdowns, but they were just tails, right? So got to give it credit. If you'd have bought there, you'd been in really good shape. This was the first time on the Coinbase chart that the hash ribbon was actually wrong, right? And by wrong, I mean that it wasn't the bottom, that you ended up, you would have been screwed basically if you bought this and held it. Because if you'd have bought there, you'd have been buying it $7,300 or so, and you would have ended up taking a 47% drawdown, which would have stopped out just about any trade, right? Maybe if you were hodling, you would have been okay, wouldn't have got stopped out. But even then, you'd be down 20% right now. So they were wrong, okay? That being said, let's go ahead and give them credit. They were right, they were right, they were right. They were sort of right, 50% pump. And if we look at this, the hash ribbons are now marking this as capitulation. And after capitulation, you typically get, these line of these weird colored circles, and then eventually, a few weeks later to a month or two later, you end up getting a buy signal. Okay? See back here, you got your first circle of capitulation, and that was in May 4th. The buy signal was May 25th, about 3 weeks later. The next time this thing gave a buy signal, it signaled capitulation on July 25th, gave the buy signal on August 29th, a little over a month later. The next time it gave a buy signal, it signaled capitulation in October of 2018, October 29th. The buy signal was January 7th, so about 2.5 months later. So now we do have this, in, of course, here, November 18th, buy signal a month later, December 23rd. So we've got this capitulation event, and this, goes like past history, we're going to have 4 to 6 weeks, maybe even a couple of months of sideways action, and then this thing is going to give a buy signal. So I do think that the hash ribbons should be watched. I think we've got to give them credit. Am I going to trade explicitly off of that ribbon? Hell no. There is no one indicator in the world that is so good that I would be willing to just trade off of it and ignore all the other technical analysis. That's crazy, right? But it's one thing that I'm going to try to keep an eye on this chart is the weekly hash ribbon, right? Daily hash ribbons have not been as good. They've still been pretty decent, but the weekly, really good, okay? So I want to show you guys that because some people, again, they think the bottom is in. They're loading up right here. I think long term, and this is just a guess, I think long term, they'll probably be okay, right? I think even if Bitcoin does go down, I think it's unlikely that it wouldn't go back up to at least $6,000 at some point in the future. Whether that's years away or not, we don't really know. Of course, there's a possibility it never goes back to that. But I think most people, as long as they're not going crazy, as long as they're willing to be underwater for, a number of years, they probably will be okay, right? Me personally, I don't want to be underwater for a couple of years. I'd rather be patient, wait for some structure, and wait for some type of bottom type of signal, and then try to buy. And I still think it's entirely feasible, guys, that this does pull back to $1,000, right? I'm not saying that's guaranteed to happen. I'm not saying that I won't buy no matter what before then. I'm just saying that it's absolutely a feasible scenario where we do pull back. It really depends on what happens with the stock market. I know people are saying that these have decoupled. They're not decoupled, guys. That's bullshit. Anybody who's telling you that is a fantasy. The day that Bitcoin pumped, the biggest part of this pump was actually in a 1-day time period. That very same day, I made like 40% trading Carnival stock, which was one of the cruise lines that got hammered because of what's going on with this COVID-19. I was still able to get in and out for nearly 40%. It actually pumped like 70%, and I got about 40% of it, right? I did a trade on oil that did really well. I traded some silver that did really well. Gold had a nice rally. I didn't trade gold. But gold had a nice little like dead cat bounce, right? This just moved with the other assets. The other assets moved up and so did Bitcoin. Stock market, seems to be leading the way right now. So keep that in mind. So that's the weekly chart. That's what I'm watching. I will watch this hash ribbon, and I'll also watch this RSI and see if this yellow line acts as resistance again. If we get up there, if we start to dump, the one thing to keep in mind that every single time the weekly has gotten oversold on Bitcoin has marked the bottom, right? You can't see it very well in this Coinbase chart because it's only gotten oversold once. But if you go look at a BLX chart, let's just do it real quick so that you can see it. We're on a weekly chart. This is Bitcoin. Right here, it got oversold. Bam, that was the actual bottom for Bitcoin. Time before that, it got oversold was January of 2015. Bam, that was the actual bottom for Bitcoin, right? It almost got oversold right here, but didn't quite get there. It was 30.36. That was not the bottom, right? Got oversold here, and those are the only two times in a weekly chart that Bitcoin has ever been oversold, and both times marked the bottom. So this starts getting down into oversold territory in a weekly chart. That's really going to get my attention and make me very, very tempted to start picking up long-term investments on Bitcoin. Okay, that's the weekly chart. Let's jump over to a 3-day chart. The 3-day chart, RSI is still telling the magical story, guys. I posted about this on Discord, right? This price had run up, this RSI had run up and had just stopped right here. When this tail was up here right at $7,000 or 6,990, RSI was sitting right at this blue line. Those of you that have been watching the channel for a while, you'll remember this blue line. This was that line of resistance / support that I started talking about, back here in November, December area. That's really when it started to, make sense to pay attention to that line. It was a semi-support / resistance all through 2018, and then it started acting like that again in 2019, and again, firm rejection. Of course, right now it doesn't look like it was ever up there, but again, it was when this tail was, or this wick was happening, and then when it closed, it had pulled way back down. So still going to watch that, right? I'll be watching for bullish divergence to form, right? If we do put in a lower low and we can get a higher low on 3-day RSI, bullish divergences on the 3-day chart have been magical signals, right? And I'm talking about divergences that are coming out of the oversold territory. For example, you'll notice here this huge bullish divergence, and that actually marked the bottom of the 2018 cycle, okay? That is something I will be watching for. Now, remember, this is barely oversold, whereas this was deeply oversold. So if we do get true capitulation, this could end up being way the hell down here around 15 or 20 RSI. So that's kind of the 3-day chart outlook. If we look at the daily chart, so we did fill in this gap. We've talked about that in past videos. That's wonderful. I'm happy it's filled in. I'm going to leave it there for a little while longer because that was just a tail, and I want to see if there's any more volume that comes in to fill that in, like trading that happens in that range. We still have all these red lines. Most of them no longer matter. This red line no longer matters up here. It's just there because I haven't removed it. This red line probably isn't going to matter much. We're so far away from it. It's upward sloping, so I don't care about that one a whole lot. I do care about this red line. This is the long-term price support that goes back to 2018. You can see that so far it has acted as support. It's done its job and kept us from going lower. I also care about this red line if we can get up to it. But the first line that I care about in terms of resistance is this green line, right? Even though we got up to about $7,000, which was weekly resistance, this was the daily resistance I was looking at. This is basically the previous quote-unquote bottom, right? This is what people thought was going to be the bottom in December of 2019. It's right around $6,430. And you can see that we threw a tail above. I keep saying tail for some reason. We threw a wick above it, right? But after that, no. Price would come up, hit it, reject. Come up, hit it, reject. Come up, hit it, and reject, right? So I want to see a break and a daily close above that level before I start feeling too bullish, okay? As long as we're underneath that, it just looks like resistance to me, all right? The other thing to notice on this chart, I have it circled here. This was a golden cross that a lot of bullish people were talking about. Hey, we've got this golden cross, and this is a reason that I know this is the bottom back here, blah, 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 right? And I said then, look, I'm not a big fan of crosses. I think they're worth paying attention to, but I'm not going to enter a trade based on a golden cross alone. And of course, I'm glad I didn't. Just like back here, if you would have entered a short on a death cross, you would have probably got stopped out, right? The difference, guys, here and here is big. Because back here, we had our 200-week moving average going up and our 50-week moving average going down. It's still a death cross, but some people would disregard it altogether and say, no, it doesn't count, right? They both got to be moving down. Well, we have that now. We have our 200-week, I don't know if I just said weekly or daily, but I meant daily. We have our 200 daily curling down. We have our 50 daily also curling down at a pretty drastic rate. So now we're getting a death cross where the 50 is crossing the 200 and they're both moving down. And we're getting that death cross amid a global pandemic where we're seeing, basically an economic collapse unfolding. So if ever I was going to pay special attention to a moving average cross, it's going to be this one, okay? I think it's very, very dangerous right now to get overly excited. Now, again, I still have some cryptocurrency. It's not a ton. It's a few Bitcoin worth, and that includes all of my altcoins and the Bitcoin that's sitting in my trade fund, right? I've pulled a lot of my money out of my trade fund, and I went and I put it into, in some cases the bank. And in some cases, I did pick up like some silver the other day that I'm going to hold long term. I bought it down around 11 something an ounce, right? Just because I don't know how bad this is going to get, and I don't know if all these exchanges are going to survive this. And if the exchanges don't survive, I want to make sure that I'm not, losing all of my fiat, right? Pretty simple thing to think about. So what I'm doing in the shorter term is I'm keeping smaller amounts of fiat on the exchanges, smaller amounts of Bitcoin on the exchanges, and then I can trade with leverage if I do think a bottom is in. I can just take a trade with 3 or 5x leverage and then eventually swap it out down the road. So that's right now I'm still pretty bearish but I'm not going to sell everything because there's always that possibility. And I don't want to get off on a tangent with this, but there is always that possibility that this ends up triggering a move toward a cashless society, where everything really does start to get a push toward digital. Like, hey, money is dirty. Money is dirty. It spreads germs. It spreads disease, right? We could see a narrative like that develop. And I still think it's possible, maybe not likely, but I still think it's possible that maybe Bitcoin does start to get picked up if it starts to accumulate and show that it's not going to completely fizzle out. You might see some people, tiptoeing into Bitcoin, maybe some people that would not have invested otherwise. We're seeing some very, very serious stuff happening globally. For example, the Australian dollar has basically collapsed in the last couple of weeks, right? I'm not a Forex trader, guys, but I try to keep an eye out on big news events, and this is one of the big news events, right? If you look at the Australian dollar, look at this, right? This is a really big deal for people that, let's say that you're 65 years old and you're Australian, and you have all this money saved up, and suddenly your money just lost 15 to 20% of its value. I mean, that could be the difference in being able to retire and not ever retiring, right? It's a really, really big deal. And this is a weekly chart. Here's a monthly chart. If you look at it on a monthly, it's even more drastic, right? This is a 1 month candle. Just boom, just the bottom just fell out of it. So when we start talking about that, you have these people who are saying, you know what? My money has lost a bunch of its value, and they could start looking to put their money somewhere that they feel is going to appreciate in value. Now, Bitcoin has lost value at the same time. It's actually dropped worse than the Australian dollar, of course, which is why I think it's probably unlikely that it happens, but it is possible, right? And because it's possible, I do want to have at least some type of hedge, because, if Bitcoin does suddenly go up, and start moving back up, it would be nice to have at least some. Also, right, I'd like to keep a little bit of Bitcoin because last time, and this is a mistake that I made, when Bitcoin, in the summer of 2019, when I basically sold all of my Bitcoin, there were a lot of alt setups that I saw that were Bitcoin pairs, but I couldn't trade them because I had no Bitcoin. And my thinking at the time was that Bitcoin would drop, back down to 4K in a couple of months' time, and it would be worth skipping those trades because I could just buy a bunch of Bitcoin back. Instead, we all know that it took 9 freaking months to get to where I wanted to get to with Bitcoin, and so I missed tons and tons of trades. And even though Bitcoin lost its value, I could have made so much money trading those alt pairs that I actually would have come out ahead. So this time, I'm going to keep a little Bitcoin. That way I can still trade alt pairs regardless of what Bitcoin is worth. And I'll basically stack sats, which sounds kind of stupid, right? If you think Bitcoin is going down, which is why I didn't want to do it all through here. This is Australian dollar, but it's why I didn't want to trade and stack sats through here. But I do think that at this point, I'm not going to feel too bad about stacking Satoshis at $6,000 Bitcoin, right? Even if it goes down to $1,000, like I said in the beginning of the video, I think long term it's probably going to go up higher than that. And so, keep a couple of Bitcoin and see what happens. That's kind of my play on it, if you will. So that's the daily chart. That's the 3-day chart. Those are the levels I'm watching. It was interesting. I happened to find, I didn't find it. I just pulled it up. I forgot all about this. I did go back and look at this old line chart that I had done. And I had done this, several months back. And we had all these targets on here. And we did hit this green line. This is a line chart, so you can't see it. But if I put it on a candlestick chart, it did hit that green line. I drew up, probably 6 months ago I drew this thing. But the line that we haven't hit yet is actually this purple line down here, which is what I had drawn up as the 4-year trend line. And if you look, it's right down around $2,000, right? So maybe we do get there. I don't know. I just thought that was interesting. Also, I just added these hash ribbons to this. Like when I pulled this up, these were not on there before. And these are the daily hash ribbons. Again, they've been more accurate than, less accurate than the weekly, but not terrible, right? They gave a buy signal back here. They gave a buy signal back here. They're showing capitulation again, right? Buy signal back here, a couple of buy signals back here. You can go back and check their accuracy. I want to say when I checked it, it was like 75 to 80%, right? So pretty decent. Which, oddly enough, is better than probably 95% of traders, right? 70% accuracy rating is probably better than 75% or even 95% of like Twitter traders especially. So I did pull that up, all right? Let's talk about real quickly this bubble chart, right? So I had said last week I thought that we had begun the panic phase. Please remember, guys, right? After panic, you still have capitulation, right? I don't know if this was capitulation or not. The long tail makes me think that it's possible, but it would be odd to have that all in one candle. So if we do get capitulation, like in 2018, we had panic, and then we got our final capitulation event. This could absolutely go lower. And then, of course, if this is a bubble, and so far it looks like it is, right? Then you typically get this sideways grind where you fall into the anger stage, which again is a lower low, right? This right here kind of would have been anger, right, on Bitcoin in 2018. And then you get the depression phase as well, right, where you're just grinding sideways, and it feels like it's never going to come back, right? It's not typically in a bubble. You don't typically get boom, here's the bottom, and then straight back up. You typically move sideways. So keep that in mind. All right, what else we got to talk about today? I got a list over off to the side here. Let's talk about total market cap. On the total market cap, the only thing I really want to talk about is just this monthly chart. This is the trend line from back in 2017, right? And I think it's the level that we want to watch. We had come down. We had basically, on the total market cap, we had basically tested our bottom, right? The lowest monthly close was at 106 billion. Price came down to 108 billion. So basically tested the bottom, found support there and bounced off of it. So now we're kind of in this range, right? Here's the old bottom here, right? Around 185 billion. Here's the other bottom down around 106. So we've got a range there. And right now we're on top of this trend line. But if prices start to move down and March ends up closing out of this trend line, I would expect more downside. So keep an eye on that, okay? As far as alt market cap, I have not really looked at it lately. Let's take a look here. Put a horizontal ray on there. This is the monthly low from 2018, right? And when I say low, I'm talking about the close. We actually slipped underneath it. Looks like we actually tested the real low, right? Including the tail. The monthly tail on this thing came down to 36.75 billion in 2018. This came down to 36.86 billion. So basically, this could be a double bottom on alts. That would be wonderful if we consolidate sideways and this was our double bottom. Great, right? I'd be happy to buy some alts, but I don't want to rush into it. This is the monthly chart. Things unfold slowly. But if we look at the total market cap on alts, this almost looks like an evening star, I believe is what they call this in stocks. When I was taught, this was called an empire by the guy that taught me, right? And basically it looks like an Empire State Building, right? You got the sides of the building and then the great big needle. That is an extremely bearish candlestick pattern, right? The one thing that I would say is, you normally don't have a tail on it. Normally, for a perfect pattern, these would have, like pretty equal bottoms with no tail, and then you'd have the needle in the middle. So, depending on how it closes, we'll see. But it doesn't look good right now. Certainly doesn't look good right now. Okay, so checking my list. I think that's pretty much everything on the cashless society type of deal, on the crypto type of deal. Real quickly, guys, I just want to remind you, I would watch the stock market. It really is giving clues. This is the Dow Jones Industrial Average, and if you draw Fibonacci levels from this previous low in 2009 to the high so far, we get a 61.8 Fibonacci level down around 15.3K. That's still a pretty significant drop from where it's at. If it does move all the way down there, it's about another 19 to 20%, which would not be good for cryptocurrency. And we're going to get a similar looking chart on the S&P 500, right? This is the S&P 500. This is a monthly chart. By the way, these are both, this is a yearly chart, right? On the Dow Jones Industrial Average, this is a yearly chart. And this here is a monthly chart. But the first line of support on the monthly on the S&P 500, it's really down around not 213, but this is the ETF. So if we look at the SPX, the first level of support really in my eyes, is down around 2100 to 2200. Okay, and then the level below that, if that doesn't hold, we could be looking down around 15 to 1600. And if we draw Fibonacci levels on this thing, right? Put this on a 12-month chart real quick. If we draw Fibonacci's from this low back here in 2009 all the way to the top, again, our 61.8 to 65, right? Our golden pocket is sitting just above this old support, right? So that would be about a 50% or 60% pullback. Like if it goes all the way down to the 61.8, that's going to be 49.5%, right? So around 50%. And if you're thinking, oh, no, it's not going to do that, that's typically what it does, right? If we look at this thing and we look at this big crash back here in 2000, it crashed 50.5%. If we look at the next crash, the financial crisis of 2008, right, it crashed 57%. So here we are facing what could be one of the worst economic, disasters ever. And if people are going to say, oh no, we're done crashing, it's crashed 32%, that's it, I think that's probably far-fetched. I think that it would be absolutely normal to crash at least 50%. And again, these two crashes between 50 and 60%. And when you look at this, if the support is way down here, right around these levels, around 1400 to 1600, that ballpark, and that happens to be the golden ratio on the Fibonacci levels as well, that's an area that I'm interested in, right? Very interested in. Now I'm going to be interested in buying there if I can find some structure, but I'm also going to be interested because so far, like I said earlier in the video, Bitcoin and crypto as a whole has been following the stock market. So if the stock market is only halfway done with its crash, then I think that, Bitcoin obviously could have a lot more downside to come. The one thing that I think people have to be careful of is, this is a big drop. And it wouldn't be all that unusual to get some type of dead cat bounce. And this, I don't know how high it would go. I'm just drawing here, right? I'm not even, don't pay attention to the prices. I don't know. I'm just saying, could get some type of bounce off of this, right? Like a relief bounce, like we just got in Bitcoin. And then the real slaughter could begin, right? You get that A, B, C type of correction. So I just think right now that, we should all be cautious. I'm not telling you how to invest. You got to do what's best for you. But me personally, I don't want to get into a position where I'm going to have a drawdown that lasts for multiple years, right? I was on the phone with my brother earlier. My brother is a very successful guy, and he has, a fair amount of money in the stocks and stuff. And I asked him, what's your plan? He's not a trader. And he said, well, first of all, I'm not going to look at it because I don't even want to know how much I've lost. But number two, I'm just going to wait. And it was funny because even not being a trader, just being an investor, right? He said, I think it's entirely possible that, the Dow Jones is going to fall down to 15,000. And I told him, I said, it's amazing that you're saying that number because that number is actually backed up with technical analysis. And so, his plan is to wait until it gets down there. If it gets there, he said he'll probably invest more. And if it doesn't get there, he said that's fine too. He's happy to hold what he has. So I think a lot of people are kind of in that same position, right? They haven't been shook out yet. I don't think he will be shook out. He's done well financially, so he's not going to be in a position where he has to sell to pay his bills. But for the average person, you've got to ask yourself, how much can they take before they finally throw in the towel and say, I can't take it anymore, and they capitulate. We have not in my opinion, we have not seen capitulation in the stock market yet. It's only beginning. That's my opinion. All right. So the video, it looks like it's coming up on 40 minutes, depending on how much I edit out, my coughing and ums and ahs. So I'll go ahead and wrap it up there. Guys, I want to remind you one more time, if you haven't joined the Patreon yet, you can join it for less than a cup of coffee at your famous coffee spot, right? It's $4.95 a month for the basic option that gives you more frequent updates, also gives you more frequent videos, excuse me. Also, there's a $7 option where you get those additional updates. Plus, I do a couple of case studies a month on trades that I took, kind of walk through the thought process behind the trade. So make sure you check the description for that. We're almost halfway to the goal. The goal is to get that up to $1,000 a month recurring, and when it's there, then I can commit for sure to doing at least 3 videos a week for the Patreon members. All right, and then of course if we get up to 2,500 after that, I'll commit to doing 5 update videos a week. But let's cross one bridge at a time. First bridge is going to be $1,000 a month. Also, I want to remind you guys that even though I trade professionally, even though this is what I do for a living, I am still just some guy. I've only been doing this for about 3 years, so you should always do your own due diligence. You should always, use caution, and obviously you should always seek out professional investment advice before making any type of investment. Nothing in the video is financial advice. Nothing in the video is trade advice. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel. And of course, don't forget to click that bell icon to get notifications when I release new updates. This is James with Crypto Common Sense, reminding you to please trade safe.